Hi, I just wanted to talk real quick about something that happened at work today because I think this comes up a lot in real estate and that it can be confusing. So, what happened is I have clients and we're writing an offer for a house and they asked me, should we ask the seller to pay for closing costs? Well, that's an excellent question, and the answer depends on your situation in particular. So, what's important to remember is that maybe you've had a friend that says, "Oh, I got the seller to pay my closing costs," or someone's telling you, "Make sure you ask the seller to pay your closing costs." It doesn't necessarily mean that you're getting a better deal that way. That term is a little misleading because what is actually happening is that as the buyer, you're financing your closing costs. And I'll get back to that in a minute. But first, what are closing costs? Well, when you're purchasing a home, of course, there's a cost to that. There's a lot of people that work the transaction along the way and they need to be paid. And so you're probably going to get a mortgage. And so there's going to be lender fees and you have to pay for the appraisal. There's title work. You have to have a title search done, title insurance, and that protects you if someone else claims ownership on the property. You're going to need to pay for prepaid tax and homeowners insurance. And all this is costs, and you're going to have to bring this money in cash to the closing table. So these closing costs can be anywhere from 2% to 5% of the purchase price of the home. So if you're talking about a $300,000 home, your closing costs can be anywhere from $6,000 to $15,000. And that is on top of the down payment for the home. So the down payment is the money in cash that you're contributing to the purchase of the home that's not covered by your loan. So say you're putting 5% down on this $300,000 home. So your down payment is $15,000. So you're going to bring $15,000 in cash to closing for your down payment. And then you need to bring another, let's call it $10,000 in cash for your closing costs. So a lot of people just don't have $25,000 in cash for closing day. And so that's where this seller paying for your closing costs comes in. So the way that works is, say you and the seller agree that you're going to purchase the home for $300,000, but you need the $10,000 in closing costs covered. Well, the seller isn't just going to give that to you. So what you can do is offer $310,000 on the home, and then ask that the seller credit $10,000 back to you at closing, and then you can take that $10,000 and apply it to your closing costs. So that can be a really great way to get into a home sooner with less cash out of your pocket, and really provides more opportunities for home ownership. What changes though is the reason you're financing this now is that same originally when you're paying $300,000 for the home and putting $15,000 down, your loan amount is going to be $285,000. Now, if you're paying $310,000 for the home, still putting the same $15,000 down, now your loan amount is $295,000. And so your loan amount went up and you are paying interest on that. And so the $10,000 when it's financed ends up costing you more in the long run. However, like I said, it can get you into a home sooner, can get you out of paying rent, and can just be a really helpful tool if you just don't have all the cash on hand you would need to cover your closing costs. So I hope that clears up any confusion about what that means. And as always, reach out if you have any other questions, and have a great day.